Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this special weekday episode of the Motor Trade Radio podcast. Today, we're delighted to welcome back friend of the pod, John O'Hanlon, CEO of Waylands Automotive. Now, John will be a familiar name to many listeners, but by way of a quick recap, John founded Waylands in 2017, having previously led Newbury-based Ridgeway, which was then sold to Marshall Motor Group. Initially a soulless Volvo business based in Reading, Waylands grew with Volvo along the M4 corridor, adding Polestar, Kia and MG along the way. In July this year, it further expanded with the acquisition of 3 sites from HSH Motor Group, adding Honda businesses in Bristol and Cardiff, and Jaecoo and Omoda showroom in Bristol. Now, this move marks the group's debut with all 3 brands. It also added 74 new colleagues, and it saw the group extend its reach into South Wales. Now, this acquisition also followed hot on the heels of Waylands adding a second Polestar franchise to its network in June. The group, which has won the AM Dealer Group of the Year award for 6 consecutive years, now operates a total of 16 sites representing 7 franchises. So welcome back to the pod, John. I hope I got all of that timeline correct. It's been a busy old 8 years, isn't it?
It has, and it sometimes feels it's beginning to show. Thank you, Curtis. It's absolutely delightful to be here with you.
8 years, John.
I know. Who'd have thought?
Moving so quickly, yeah. I mean that intro is getting longer and longer every time we chat to you, but we'll keep it going. But yeah, welcome, as Curtis said there. Welcome back, and it seems there's a lot going on since last time we caught up. But let's start off by expanding on that acquisition of the HSH businesses. I mean, what was the attraction of adding these sites and the brands? And as Curtis said there, with Honda, Jaecoo and Omoda to your portfolio.
If I could beg an indulgence, the first thing I'd like to do is just thank all our new colleagues and a lot of the Waylands team for all the blood, sweat and tears that went into the acquisition. Sometimes those smaller deals can be just as difficult and time consuming. But with this one especially, we had to change every single system in the business, from the DMS to actually how we did our visual health checks. So it's been an incredibly busy, sometimes frustrating, and hopefully getting to the rewarding stage. So firstly, it's a thank you for that. To answer your question, Honda, I've had quite a long relationship with. I've been an admirer of the brand, and it goes all the way back to those Ridgeway days. So maybe a little bit more than 8 years in the making, Philip. Yeah. I was lucky enough to visit Tokyo in Japan, where we toured the plants. We went to Suzuka. We went to head office and met a member of the board, and I even spent time with Asimo, the robot. And it's quite an exciting time for Honda. They're really reinvigorating the product with 2 brand new EV products, lots of new hybrids arriving. I think that plays to some of the changes that have been made to the ZEV mandate. It's a retail brand, and now I've become an international dealer. Bristol and Cardiff is the biggest AOI for Honda for after sales in the country, and that plays to a lot of our strengths as a business. So overall that's really exciting. Omoda and Jaecoo, we know it's a new entrant. And I think like any franchise decision, you can get really excited very quickly. But I always compare it to the marriage, where you can get very excited, but if it's not the right marriage, if it's not the right partner, it can be really expensive to get out of. So we spend our time, we did our diligence. We spoke not only to the brands, but also to a lot of the brand partners, and overwhelmingly, it came back very, very positive. Um, and we've found, with Omoda Jaecoo is, brands that are willing to listen, they're willing to invest, they're willing to collaborate, and to drive on. So all in all, we're incredibly happy, with the acquisition and with how the brands are now beginning to settle in.
And obviously, as you say, there's a lot of talk around the emerging brands, whether the Chinese new entrants or others, but predominantly from China. But as you say there, it is doing your due diligence, it's doing your background work, it's working with them. I mean, what is obviously from a strategic importance of adding those two brands to your business, your operation, your portfolio, but what's been your initial experiences as well so far? I mean, you just touched on it a little bit there. That they're willing to listen, they're willing to adapt
Yeah.
and work with you because they haven't got an existing network, and obviously they're after brand representation and volume.
I mean, the good news, because it's Bristol, it's an area, it's part of our area of influence that we have grown to understand, know more about. So it's from that position, we understand what we've got to do in the market. But 3 weeks in, and I can say it's genuinely been positive. They've been challenging around the key areas that you would expect them to be challenging around, whether that's been around, what's our goals, our ambition, our targets, right the way through to how are we going to achieve that round about marketing. And that's where, I've been reassured by the fact that yes, they're demanding round about what marketing we've got to do, but they're also willing to invest alongside. And that sort of working together, that cooperation, it really does. It just gives you the confidence to continue to invest in the brand.
And John, I'm aware that you're only 3 weeks into representing Jaecoo and Omoda as we record this, but you will be looking strategically and you will be looking at scaling operations. What are your long-term plans for the brand? Because we know this brand, the manufacturer behind Jaecoo and Omoda, Cherry, is keen to expand in the UK at quite a rate. So how do you see that affecting your operations in terms of scaling what you've already got?
I think if you look at what we've done in the past, I've always been clear. Having one representation point is never enough. It's got to be important to your business, and your business has got to be important to the brand. So we do need an element of scale with all our brand partners, but we are literally we are just in the door, and it does follow on from the Polestar acquisition that we made. So I think again, it's about getting to know the brand, building the trust in the brand, allowing the brand to build trust in Waylands, and then we'll see where it goes from there. We often talk about the importance of strategy. And our strategy is to try to find the winners. If you're working with a winning brand and the surf's up, it means you don't have to do as much of the heavy rowing. But that is so difficult at the moment. The market is so dynamic. We've got so many new entrants, as well as the existing brands, trying to make sure that they keep their market share. So it's a difficult job, but I guess that's what I get paid to do. These are the decisions I have to make. Looking at Cherry, Cherry do want to again grow a brand and have a market share. And we're working to understand, how that will fit in and around Waylands. But again, that takes more investment. And right now, I'm just really cognizant that I not only have to look at the opportunity, I've got to look after the brands that we work with today.
And talking of Cherry UK are being launched in the UK towards the end of this summer. Initially, I think with the Tiggo 7 and Tiggo 8 SUVs. Are there any plans underway to perhaps add Cherry UK to the Bristol site?
The quick answer is no. I think they need separate representation, and that site at the moment, I don't think would be big enough to fulfil their ambition. So it would require more investment, and I think that's where you get back to the point of understanding what do we want to do going forward, who can we work with going forward, and that's the part. I mean, I sat in the product at the Festival of Speed, and again, it's another terrific car. Sitting inside the fit and finish, the tech, it's really, really good. They have made a really good winner, but we have so many great cars coming into the market.
And following on from that, John, as a group that represents Volvo and Polestar, owned by Geely UK, are also launching into the UK. So are there any conversations that you're having with them, because they will be looking at you as a growing Volvo partner? Any conversations about representation there?
I think, again, it is entirely separate from the other Geely brands in terms of Volvo and Polestar. But yeah, it would make more sense, wouldn't it? Since we will be using, I guess, a lot of the same systems. I have driven the Geely 5, and again, it's a good car. I was in a pre-production, but it's a good car. And that's the part, again, where I think it's incumbent upon dealers to understand where does each brand sit and what are they going to do. Part of that is doing your research. So we are looking at our brand portfolio, and I'm really, really happy with our brand portfolio. So I think that's the long and short answer.
Yeah. I say, I mean, it's just to say, you come on so quickly in 8 years and getting those sort of territories and geographic coverage, but again, building your brand partners, haven't you, alongside all of that? So I think
it's, Philip, it is really, really important that you don't spread yourself too thin. And that's where I can say, we can get very excited about new partners and what they're going to bring, but it's all about making sure that you're working with the right partners, and you've got a depth of relationship. You understand the brand, and the brand understands you, because otherwise you can then go down making the wrong decisions and spending a lot of money. I would rather, one of our pillars of our strategy is to dominate our local regions with the brands we represent. And I'm not sure you can do that if you've got lots and lots of separate relationships.
No, and you can see that in your organisation. I think the fact that relationship you have with your brand partners and how they work with you is very clear. I mean, just moving on to, we couldn't have you on today without talking to you about the latest ECG, the electric car grants, and obviously with the brands that you represent. And obviously with the announcement from the government, and we talked about it on the podcasts. I think the last couple of podcasts we've sort of talked about it. What does this mean for Wayland's business? I mean, have you seen any uptick, any positivity, feedback from your brand partners in relation to the incentive?
Yeah, and I was talking to someone about this. I'm saying I'm not sure if this is not one of the cleverest things the government's ever done. The fact that they introduced the grant, but we didn't understand which cars would qualify, and the more you dig into it, it looks like not a lot of brands models will qualify because of the Chinese element. It doesn't even down to manufacturers, even in terms of battery. And I'm not quite sure. I think you've got a lot of the brands running around try to understand some of the sustainability measures included within that. What it did do in the initial week was it absolutely caused a little bit of excitement, a lot of interest, but it also slowed down decisions. As soon as you introduce uncertainty into a big buying decision, people slow down or people stop. And that was a negative. Where I think our brands have been great is absolutely responding to it. And if you look across all our brands that would have been impacted by this, they've all came up with some form of grant. So seeing what Volvo, Kia, MG have done, some are tier 1, some are tier 2 level grants, but they have responded. They produce new money, and that's the money that we can then take to the customer and say, we might not be able to give you the government grant, but here's a Kia grant that would match the level of support that you'd receive.
And I mean, in terms of, have they gone far enough? Have they done enough? I mean, we know that it was sort of flatlining, wasn't it? The uptick of EVs in the new vehicle market. Whether whether this is enough in terms of the money, but whether it's grabbing the headline and stimulating that interest back in EVs. Do you think they've gone far enough to get interest back in that EV marketplace? However it's been done, whether it's through the government grant or whether it's through interest in EVs.
Yeah, now look, I don't want to go full Robert Forrester with you,
No.
but they can go a lot further, and I think they need to. If this is one of our key strategies to improve the sustainability of a country, and there's so many wins from electric cars, then we've got to be serious about it, and that's every part of it, including charging. That we shouldn't be asking people without a drive to pay 70, 80 pence to charge the car. That's an outrage. We need to do something about the VAT on this. Yeah. We still haven't dealt with used EVs, and there will be a knock-on impact from this grant arriving into new cars. So I think there's a lot more we can do. I think the industry's on the record about what we believe we need, and the government have managed to get some headlines, and I'm not sure how many cars will fully qualify. Nissan absolutely will do.
Eventually, when they've got a car, yeah.
But then I guess that's maybe why the money will last till 28, 29.
Wait for the Leaf to be produced. Is that what you're trying to say, John?
and that's the part where I'll be really interested to see how many cars do qualify for the government money.
Yeah, no, I think it's still early days yet, because obviously immediately all the manufacturers were putting their submissions in, weren't they? And back to your earlier point, what was the rationale for it? Was it to stimulate through the announcement and the initiative, or is it actually is it to boost a domestic production rather than EV uptake? We don't know, do we? But at the end of the day, money's money. At the end, as you say, it's creating new money into the sector. And
I think there's that point where it is UK government money. So I'm just giving it to I do understand the argument. It's just let's just be really clear about what we're trying to achieve from it. Yeah.
And I mean, you touched on used EVs there, and as an organisation, as a business, you're performing extremely well. You're doing well in terms of the the current climate, and part of that is your used and after sales operations that are a key part of your business, and EVs make a large element of that. How is the used EV across your sector? Because we always talk about not enough incentive on used EVs, depreciation on used EVs. We're starting to see some stabilisation and some uptick in used EV values now. What's the play across? Because it might be obviously different brand by brand. I suspect.
That's a very fair point. We unashamedly set out with brands that initially were very strong in terms of their electrification credentials. So, if you look at, we probably a third of our used cars are BEVs, are fully electric. So, we have embraced it, and we, like most dealers, had a very strong Q1 into Q2. As we come into Q3, it has got a little bit bumpier, but we know what we've got to do. And I think things like the introduction of the battery health check, going back round, making sure all their sales teams, because this doesn't stop, can actually talk to customers around about their needs, their wants, how it fits in their lives, cost of ownership, those sort of areas, and be confident about it. That's where we continue to concentrate on, because I see EV as inevitable. Once you've driven it, you wouldn't go back, and it's about when rather than if. So I think that plays well to the brands we represent, and I think we do well uh, as we continue to concentrate in that area.
Yeah. No, I think you're right. I think that training, that education, that
Yeah.
knowledge base is key across this transition for used EVs. It's not all about the new market that's been driven through incentives, but I totally agree with that one.
And again, in the short term, this it's going to affect used car values, absolutely. If new car if the new car transaction prices is suddenly between 1,500 and £3,750 cheaper, then it's got to impact on the transaction values for used as well.
Yeah, which is a bit that you'll need to just keep an eye on, monitor, and keep your eyes wide open to that used market for depreciation, aren't you?
And it is that's the part where you just tighten up what you do, and it's never fixed. I wish you could say you fix it, but every day, every week, every month, you've just got to be constantly monitoring. But we've got more tools than we've ever had. As a business, we've got more investment. I was talking to Jake only this morning round about where we are and what we're doing, and we're really clear, and he's really focused with the GMs, with the sales managers around, some of the opportunity and some of the risk of the exposure we have to electric vehicles.
Yeah. Well, we'll be back after this brief break, and we'll be more from John O'Hanlon.
You're listening to All the Chatter That Matters, a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, John, you recently published your full year results for 2024. And while many franchise groups had a challenging year in 2024 compared to 2023, you actually delivered a strong performance with record new and used sales and increased after-sales revenues. Can you take us through how this was achieved?
It was, again, it's all about context. And I think if you look at this business, not only have we been growing in terms of the number of sites, we've also been investing, a lot of money in and around each of our retail sites. And that comes with not only the cost, it also comes with the disruption. And in 24, we finished Q1 we finished our last dealership refurbishment. And some of the dealerships have not just been refurbished, they've been knocked down and rebuilt. And that does come with distraction. As we've also invested more in and around our group support. And I think that is really having an impact as well. But across the board, well, you're quite right, there'll be retail or used car sales. We've grown. Service, I'm really pleased. We grew that by 16%. We sold another 1,000 cars, and at a time when some of our brands didn't have as much retail product to sell as they'd had previously. So I think we did really well. We got all the plates spinning. Our gross profit was stronger, and that allowed us to offset some of the increases around about staff and rent, and of course the finance costs. And it allowed us to invest further in and around the teams. So by the end of 2024, we had every management position filled. which has then allowed us to come into 2025, and the magic is still happening. And I'm really, really pleased with where we've got to. If you see where we're up to in terms of our new retail's up 59%, which reflects some of the harder work we faced in 2024. But used is up another 30%, and service is up 27%. It's up 16% like for like. So we're still demonstrating real double-digit growth in all our businesses.
And you've set yourself a target of 16,000 unit sales, and you've already mentioned that Q1 and Q2 were good. Q3 was a bit bumpier, but how's that tracking at the moment?
It's quite interesting how we've had to do the little pivot, because obviously with Volvo and with Polestar being agency sales, then we don't get to include the turnover. So if you look at our financials, would show 198 million for 24, which is actually down a couple of million on the previous year.
Yes.
But if we look at the total transaction value, if we included the Volvo and the Polestar in there, you're at 250 million. So that was our last. When we looked at where do we want to get to, where are our ambitions, it was to get to 250 million. You then doubled down, and we doubled up, and we went for 500 million. And, roughly that's about 16,000 units. Yeah. So depending how you measure it, but, we're already at, 5,500 this year, which is up from, best part of 3,900. So again, we're demonstrating that growth. We're in good shape, but it's across the board. And that's the part that we need to keep our business balanced. We can't rely on one part too much, whether that be new retail, new fleet, new, used or after sales. If we can get all the plates spinning, then we can drive a result. And from that result, we can then invest in the future.
It is interesting that you say, obviously, you're managing a business that you've got that blend of franchise and agency, which makes your reporting as a group slightly different, because you haven't got that revenue, like for like revenues, can you? That you can report on. But it is an interesting point. Well, let's go back a little bit. I mean, your initial success of Waylands was built on Volvo and your geographical location across that Thames Valley corridor, and then what made you choose both the brand and that area initially?
I suppose it is quite an easy answer. After the sale, that I had certain restrictions. That ruled out, and a lot of the quality brands I might have worked for had just been sold to Marshalls. We had actually been talking to Volvo, and Volvo would have come into the Ridgeway family back in the day. So I already knew some of the folks there. It appealed to me in terms of premium, in terms of comfort. Would this be a car I'd be happy to sell to a friend? Absolutely. And at the time, they were leading the charge on electrification. They were the first brand to offer hybrids across the entire product range. They were the first brand to say that we'll stop selling ICE, albeit that's been gently diluted now. It was quite groundbreaking at the time and quite exciting. So that was a lot of the reasons why I wanted to be with Volvo. I'd also, promised myself that I'd work with people that I genuinely like and genuinely want to work with. And, the guys at Volvo have always been great, always listened. And I think that's probably why they're standing out as one of the successful brands around agency and one of the successful markets around agency.
And I mean, that growth with Volvo also, obviously, as we talked about in the introduction there, saw you expand into its Geely-owned sister brand with Polestar in Bristol's, is it Cribs Causeway in 2023, and then that was followed by the addition of the location in Bicester in June, was it? And then obviously, interesting one is located one of the brand's UK headquarters.
Yes.
That was previously run by Polestar.
Yeah.
I mean, how did that opportunity come about? Is it that Polestar are now handing their sort of ownership over now and back let's say to the specialists that can sell cars.
I think in fairness, it was their only point, and they used the point to fill a geographical gap between three partners. But Bicester, which is close to Oxford, was part of the Waylands area of responsibility. So it ran from Oxford, Reading, all the way down to Bristol, into South Wales and into some of the southwest. So it made sense to have a representation point for Waylands in the east of the region. So it was all about how can we achieve that, and the discussions led to us. Well, why don't we take on the space that you already have, and we will then look to build I guess a representation point for them that's not within that space.
And John, as a group that has grown both organically and by acquisition, which do you actually prefer and why? Discuss.
I think the answer's got to be both.
Yeah.
On the way through, buying delivers the turnover and hopefully the profit in a chunk. But generally, if you look at the businesses we've bought, they've all either required a lot of capital investment or a lot of tender love and care to improve the performance, and that's cheaper in the short term, but it's much harder work if you don't have a database or a team that's been loved and been looked after. It takes a lot of investment and a lot of hard work from in and around the teams, and that's the part. I mean, I think I am genuinely lucky to have a great team round about me. From James and Richard through to Vicky and Dom. We've got a team who I do believe have bought into what Waylands can deliver, and we are all pushing in the same direction. I think that 500 million sort of turnover is where we've got to be. So inevitably, there's only so much domination of any particular market we can do. So it will require more sites. So it's probably another 60-70% sites to actually get us there. So again, I'm not. I would love to say we could do it all through organic. You simply can't if you've got the ambitions that we have.
And if you're looking to grow the group long term, by 60 to 70% in terms of what you've just outlined, how would you describe acquisition opportunities at the moment? Are you seeing many small to medium groups looking to exit?
I think it's really hard for your small to medium-sized groups that don't have a clear strategy for growth. I think you need to be of a certain size and scale to actually compete. I am sure there'll be the exceptions that prove the rule, but to make the investments we need to make, to have the resource available, given how dynamic this business is, the challenges we've got from whether it be new entrants to new legislation to ongoing claims, it's huge. It's absolutely huge, and you haven't even stumbled into autonomous vehicles or connected cars. There's so much going on that you need specialists, and you can only afford specialists on the margins we work on if you're of a scale. So I think it's inevitable. I think it's going to get harder and harder for the smaller groups to be able to, deliver what they need to deliver. But there's still room. There's still room for those medium-sized businesses or those regional groups to do what they do really, really well.
Yeah, I think it is getting, as I say, you need that scale, don't you? And you all the way through this conversation, you've talked about that brand partnership and relationship, and it comes at both sides, doesn't it? That's what the OEMs want. They want these geographic coverage partners, and that comes with a little bit of scale as well, because they want that someone to take over those territories and partner with them in certain areas. So, yeah, as you say, it's getting a little bit more difficult. I mean, just going back, I mean, you touched on obviously growth and acquisition and organic growth, and last time you were on the podcast, you had that ambition to grow the business to 100 million turnover through acquisitions and organic growth. And before your recent acquisitions, you were rated 84th in the AM 100 on a 200 million turnover.
Yeah.
And what is, I mean, you're talking there about that 500 million turnover, 60-70% growth. Have what's the timescale for what you're looking at achieving now over the next few years?
That's 2028.
Okay.
So again, we've always been overt, and we've shared that with anybody who really wants to listen, but most importantly with the teams. This is where we want to achieve, and this is how we're going to achieve it. So yeah, we had the 5-year plan for the 100 million. We achieved that within 3. We then re-established it, did it again for 250 million, and we completed that a year early. So I think we've been bolder, we've been stronger, but it's not just about the turnover. It's also about the balance sheet, and it's also about maintaining both our manufacturer engagement and our team's engagement. And that's the measures that we put upon ourselves. And we can measure manufacturer through the balanced scorecard. We can measure our teams through our customer engagement surveys, our staff engagement surveys that we do. So I think we've got clear measures. We share it with everybody from the senior management team through our general managers, all the way down to every new colleague that's inducted. These are the numbers that we share, so we're all marching in the same direction.
Yeah, no, I think is it again. You don't want vanity just over achieving a certain turnover if you're not bringing your colleagues, your staff, your employees out, right? Along with you. I mean, that's the key and success of you. And you can see that in the accolades that you receive as an organisation. I mean, it's just fantastic watching what you're doing from the sideline. To be fair,
and again, it is more. And I'm not sure if it's because I'm getting older. It is more difficult, and you're relying on, I guess, a few grey hairs. But we've still got to keep working. We've got to be working harder. It feels like there's more change than ever, and we're responding to that. After this period of growth, we're looking hard at our systems. And I think, where you look at what Keyloop's doing via ATG, See It Now's doing with Salesforce, there's a lot of challenges around how we make our customer experience as easy as possible. And it allows our teams to have a frictionless environment to work in. There's lots going on there. We haven't touched on AI. And how we bring that in, and some of the wins that we can have. Again, every probably 12 months, I'm looking at AI providers, and for the first time, I've seen a system. You're thinking, AI looks to be there now. It looks to be able to give a level of sophistication and response. Now, if they can do that in terms of voice, wow. And I think that's where, as leaders in our businesses, we've got to be working hard round about that, because these are the areas that the winners will get better at, and we've just got to make sure that we're as close to the winners as possible.
Yeah. And I mean, just to sum up there, I mean, as you touched on earlier, you're talking about keeping up with local legislations and regulations. You've got your day job to do. You've got to hit your daily, weekly, monthly, quarterly, annually targets on a regular basis. There's also at the same time what's on the horizon, whether that's autonomy, whether that's the AI development, etc. And that whole environment, and we just know that how quickly it's changed in, I say, the last 10 years, hasn't it? I mean, the automotive sector, well, yeah, 10 months is probably, everyone talks about the industry's changed in the last sort of 5 years and more than it has in 50 years, but yeah, you just have to look at it weekly and monthly, as you say now, can't you? But I think you're right. I think that's trying to keep that everything spinning at the same time, but keeping a clear goal as to what you need to achieve and what you want to achieve as a business.
I think that's the part we really concentrate on. We're aware of what's going on around us. We understand we don't work in a vacuum, but we can only control what we control. We can only control the certain parts of our destiny, and we work our damnedest to make sure that we're the very best we can be in those areas.
Well, John, many thanks for joining us. It's been fascinating getting this update on Waylands, and as you say, there's still plenty to talk about. So you must come back on soon, and we can go through AI and everything else. But hope you've enjoyed being back on the pod.
It's been great. Thank you, Curtis. Thanks, Philip.
It's always a pleasure.
That's all for now. Many thanks for joining us for this special weekday podcast powered by Motors. Thanks again to John O'Hanlon for joining us. We're back with the headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.